Thank you, Chair. Ladies and gents, this is a very, very interesting topic that we have on our hands right now as a panel. And I think for the sake of context, I'm just going to shed some light with respect to the procedure of how we're going to analyze the topic. It's going to be an interaction between the panelists and between you as the audience. I think we'll stimulate that and we'll ensure that there is cohesion between the communication on both sides. We want this to be a bit of a formal/informal session. So for the sake of discussion, thank you for the introductions, good chair. Let's just jump into our entitlement. So our title for this particular panel is Securing the Digital Economy. Now, I'm going to invite you as the audience. When it comes down to securing, let's consider this. And I know we all are analysts and we have an analytical mind, so let's take the word securing and split it into three elements. I'm inspired by the previous speakers. I'm inspired by the previous colleagues, which were very, very vocal in a lot of terminology that was placed on the table. So I'm going to adopt some of that. But when we talk about securing the digital economy, definition of securing, definition of digital economy. Let's consider three-way definition on the basis of securing. This panel is going to delve into cybersecurity with respect to the context of security, and that has to do with cybersecurity and risk mitigation. We're also going to dive into the second element of securing, which is inclusion and accessibility. And I think that element of inclusivity and accessibility talks to the effect of securing the digital economy. And the third element, which is an interesting dimension, is trust. All right, so when we are talking about cybersecurity, audience, how many of you have been either the victim or have experienced an attempt of a cyber attack? Hands up. All right, great. So we can start some sort of Cyber Attacks Anonymous group here, I guess. Excellent. And it makes it an interesting and very pertinent topic for the panel itself. So cybersecurity in its entirety is what we're going to unpack. We mentioned inclusivity, and we talked about the banked and unbanked economy. Let's consider this. How many of us here are originally from an unbanked economy? Hands up. Representation is rather low. That would mean that, do we really have the audacity to talk about the unbanked sector with authority? It's an interesting conundrum. Perhaps on the basis of research, perhaps on the basis of unpacking that, we'll go a little bit deeper into it. And then trust. We'll talk about trust in a moment, but first and foremost, I'd like to invite our first panelist, Dr. Robert, a doctor in his own right, in order for us to unpack a question with respect to cybersecurity. And in particular, the question would be, what are the most pressing cybersecurity challenges that Africa's digital finance ecosystem faces today, and how can they be addressed? Over to you, Robert.
Sure. I think unless this is not turned on, I've got a denial of service attack happening right now. Not a doctor, by the way. Robbed a few banks and helped a few from getting robbed. I think the most pressing issue is, look, we've got a real scarcity of skills in the cyberspace. If we look around at the audience members, we see that the predominant method by which attacks are being affected, I guess, and the age group that the offenders are actually in that offending cycle. Probably 60 to 70% of those offenders are under the age of 23. I don't know, put your hand up if you're under the age of 23, at least at heart. But you know, the dichotomy between, we've got a very formal academic structure around training people for certain roles. And actually that doesn't reflect when we look at the bad actors. They're learning through experience, they're doing attacks at scale, it's completely desegregated, but they have ingested a lot of the business planning, okay, enterprise relationships, They run in formal structures, but at real scale. And that's what we've got to be aware of, that the adversary out there is really looking at us and thinking that, look, this is a really healthy lunch, and we're going to be there to see what we can do to get value out of this ecosystem. And it's also about educating the consumer. So the organizations have got a role, but equally the consumer, the users of all of these technologies, have also got to understand what's at risk.
Thank you for that insight, Robert. I think that is most certainly one of the more pertinent dimensions of looking at cybersecurity. The acknowledgement that we are constantly in a vulnerable space as consumers. It does speak to an element of even trust so far as brand is concerned. But as I mentioned, we will unpack that down the line. Let's move on to the next question with the good Anna next to me. How can financial institutions and fintech companies leverage emerging technologies like blockchain and AI to strengthen the security of digital financial transactions?
That's a hefty question. Thanks, I've got the mic. So the most important part from a fintech section is, I think it was mentioned earlier, is about designing it from the outward in. In other words, taking a user journey, right? And what the user would experience and can expect inward to what the compliance and the risk mitigation factors should be. So I think we as fintechs and in this space, we get onto an idea which is brilliant, but it falls flat on the consumer education in explaining to them why are we doing this. And adding that friction often is a barrier of adoption in the market, right? So typically we can design the best car, but if it's got 20 million levers and things, I watch, I'm a big petrol head in the sense that I watch people driving new and futuristic and concept cars typically. And I'm thinking the admin you go through and double tap this and then that and then the car drives. It's typically what we see in the banking and the fintech industry is if it's not predictive and it's not something that the consumer easily understands, then we fall flat in everything we design from a fintech perspective. The same amount of friction, if I have to authenticate here, I've already authenticated myself on my device. We've got facial recognition or biometrics or anything similar, or a PIN even on an Android device. So now you sit there and you've authenticated yourself. Now you go into your banking app or your mobile application by which you do your banking. Now you have to go through 20 million hoops just to make payment or transfer funds. And that I think is where we need to be better, have less steps, less friction if the consumer has already identified themselves. Yes, the banking apps are better. They have improved significantly in saying we'll use the same biometrics that you use in your device here in our app, which is brilliant. But I still have to wait for an OTP in 9 million instances or an in-bank. And in designing these things, you may have to take into account South Africa, we've got load shedding, it's a real factor, but we've also got in Africa, you're in remote areas where there's not always cell phone reception. So typically, you're expecting functionality that we designed in the ivory towers to work in the rural areas, which it doesn't. And unfortunately, then we fall back to USSD channels typically, right? Because people don't have data, and then it's so backward at the end of the day. But you have to design with a failover for Africa. And I'm sorry to mention it, but it's a practical implication. If you want adoption, it needs to be something, either your application needs to be data free, take that into consideration so you can drive conversion. If I'm out of data and I want to buy data on an app that's dependent on data, I mean, come on. That's true, guys, it's true. That's why you're sitting with those barriers of entry. If I'm waiting to purchase something on my mobile, but I need cell phone reception on my phone for the OTP to come through, we won't convert. And that's where we need to think end to end what the solutions are, not in the ivory tower system design for something you think can work in a township or a rural area.
Ladies and gentlemen of the audience, I think there's been a lot of insight which has been shared in that last chat as well as the first chat. We've covered cybersecurity and we've covered an element of inclusivity. So let me just be politically correct though, ladies and gentlemen, and everything in between, of course, for the sake of inclusivity. All right. So good people, let's talk about trust. How many of us here, and a show of hands to the audience, believes that the net effect of a cybersecurity event, for example, is going to cause attrition to the trust of a brand? Hands up. For those of you which didn't put your hands up, I'm really curious to know what your thought pattern is, but we can talk after this. Yes, good people, there is a tangible effect to a brand, and we've seen this so far as our public exposed media is concerned. Certain, and we're not going to answer on the basis of brands itself, but certain brands have been exposed to certain bands of cybersecurity events and have negatively been impacted. Most recently, in the last 5 years, there's been an escalation. All of us here, from a cybersecurity point of view, understand the standard. The malware, ransomware, phishing attacks, all of these seem interesting. Social engineering, which is sometimes the root cause of the deployment of certain mechanisms. There are other evolved forms. Polymorphic viral infections, steganography. Now, these are all of the things that, so far as deployment is concerned, we need to be aware of. What's interesting is this is an ever-evolving landscape. From a trust point of view, for the preservation of trust, we need to be astute as professionals, as business owners, as leaders within the industry, informed, and always one step ahead, which is another conundrum which is quite interesting. How do you find yourself one step ahead, which those are who are always 2 steps ahead? You know, the criminal element and what we have seen, it takes me back to a case study with respect to Estonia. So Estonia is one of the regions that some of you might already know have implemented quite a robust identity management system. Why did they do that? Why did they do that on the level of the governmental landscape, where every element of C to G, in the sense of consumer to government, business to government, is now tracked and monitored? What was the response to that? It was a cybersecurity breach within 2007. We did have an opportunity to analyze that breach, and I can definitely say that there was an attrition with respect to even the governmental reputation on a forex level that was tangibly seen to affect GDP and the socioeconomic conditioning of its people. The topic that we are tackling here with respect to securing the digital ecosystem is not a frivolous topic. It is a serious topic. We've spoken about security, inclusivity, as well as trust. Let's talk about ecosystem. What do we mean by ecosystem? I'd like to invite a thought to the panel and to the audience to consider that the breakdown of ecosystem includes the infrastructural ecosystem, or the infrastructure economy, the platform economy, as well as the geopolitical, social, and economic elements to the economical landscape. So unpacking that is quite interesting because we're talking about physical infrastructure and we're talking about logical infrastructure, which then leads me to the next exploration that this good panel is going to go down. So let's talk about cybersecurity. One of the concerns around cybersecurity within our context is the shortage of cybersecurity skills. Robert, a question for you. We acknowledge that cybersecurity talent is a shortage in a global sense. How can Africa countries nurture cybersecurity expertise and the capacity to address the increasing demand for such skilled professionals in this domain? Thanks, Robert.
Sure, thanks. So I think one of the ways is to try and invite public-private partnerships to look at how it becomes part of the mainstream curriculum from an early age. This is something that's going to impact the 5 to 20-year-old bracket quite significantly. There's a lot of telcos, for example, that are giving away free data. wide access mobile is really becoming a reality. I think that we'll leapfrog a few generations that other regions have missed in terms of high-speed internet access, in terms of computing power access at a young age. I think that these are great tools, but they can also be misused. And I think part of doing or using the technology for good is something that we've got to try and build on. The other side is that those institutions that are there establishing things like rule of law, things like the economy, you've got to make it inclusive. And you've also got to explain what the consequences of misusing it are. And I think that's where we've got a very quick, a very short space of time to close the gap between what will otherwise be misappropriation. I think we've got to set ground rules. We've got to establish the means of enforcement and guidelines really for ethical use of some of the technologies at an early age. Otherwise, we really are adrift.
If I could just add on to that, I mean, I think it's a very interesting question you raise, and I think I want to talk about it from an OEM perspective. I mean, I've worked for a couple of OEMs, I mean, MicroStrategy, IBM, to name a few, and a lot of the times the interactions we had with customers was precisely that, to say, obviously the agenda on our side was to advance the uptake of the technology and the utilization thereof. And the pushback from the customers would always be, I don't have the skills internally in-house to actually maintain and look after the technology stack. And so what I found in the marketplace is that you'd find, I mean, specifically in financial services banks, I had one bank, which I will not name, they had a strategy strictly where they built their own technology in-house, it was bespoke, and maintained it themselves, which is a position they took because they felt this is how we're going to circumvent the issue of skills shortages and being reliant on technology vendors. However, the risk inherent in that strategy is that you have key man dependencies. You have a small clique of people within the organization who understand this software, who understand this technology on their own. God forbid if they leave, fall sick, or something happens to them, yeah? That's the one end of the spectrum. The other bank that I worked with believed in a bit of a hybrid approach, and I think it's a bit of a healthier approach, yeah? There's aspects, I think there's times when within an organization, there'll be processes perhaps that are unique to your business, that maybe you want to keep in-house, but succession planning becomes critical. And I think management, in fact, has to be very intentional about succession planning and skills transfer, which doesn't happen a lot, I've found. If it's not sort of scheduled, KPI'd, you find a lot of the times people will just hang on to the knowledge. Sometimes it's about job security. So people hang on to the knowledge because it makes you important, it gives you a title, and you don't want to share that knowledge. So I think, the C-suite has to be intentional about that. Succession if you're going to do things in-house. And then if you're going to take things, for example, to the cloud and consume managed services, which I see a lot of banks also thinking of doing as they're embarking on their cloud strategy, is that you've also got to do the driving internally to compel your technical team to do the training. It's not good enough to have a managed service that you're just going to pay a vendor to manage for you, because that doesn't do much for, managing the risk of if things go wrong and you're not happy with the service level agreements with your OEMs. And at the end of the day, your KPIs are compromised, business is not happy, it just doesn't really work out well. So I'm of the view, personally, that it's important to have a healthy balance of the two. I think it's important to drive your own sort of in-house training and succession planning and skills transfer programs, and it doesn't have to always be formal. It doesn't always have to be the hard and fast sort of, LMS approach, learning management systems, where you're learning a course. Sometimes it's proverbial hackathons, where it's not just about innovating of products, but also the sharing of knowledge and showing other people how it's done. And sometimes also about learning a variety of courses from a variety of vendors. I think what I've also seen, which is my parting shots, I don't want to talk too much, but having a sort of multi-vendor strategy where you have a fair blend of vendors in your environment, and you reflect the skills requirement in your business to reflect on that. So if you have a little bit of SAP, a little bit of Oracle, a little bit of IBM as an example, and institute those skill sets internally, I think it's a safe way of balancing that skills conundrum. Yeah.
If I can top up very quickly.
Yeah.
I was just going to say that your device manufacturer, how many of you read your device manufacturer's user manual for the phone that you're driving? So the technology has actually got to be consumable in order for it to be adopted. So I think in many ways it's going to flip. that enterprise solutions are actually going to be a bit less user manual focused. Otherwise, they risk de-adoption or demise.
And I think it's important to add to that is the digital economy relies on a gateway of some sort into that virtual world, which brings the security back to the MasterCards and the Visas and the schemes out there, which we have a general expectation to be the gatekeepers of protecting my data, etc. If we Visa or MasterCard certified, we expect, or CCPI compliant, then we expect that my transaction data will not be stolen or stored. But you cannot expect the consumer, once again, to know, I cannot click on this, because typically it takes you to either a hosted payment page or a redirect of some sorts. The consumer does not have any means of knowing I'm redirected to a bad directory, right? So that safeguarding should happen from a gateway perspective in partnering with the right, obviously having the right software, yes, that hybrid model, but also making sure that your partner in your gateway services has a dedication towards cybersecurity and, in general, the safety of the consumers that transact on it. You've got a moral obligation, and now I'm treading on dangerous ground, but every business that's online, that are selling financial services, products, or anything, have a moral obligation to the illiterate and the uneducated consumer out there. Otherwise, you should close your doors, or I'll help someone close your doors. My point being is, if that is not top of mind in protecting the people that are interested in the products you're selling, whether it's VAS or whichever else, if you don't have a commitment from a C-suite level or elsewhere on the consumers that are interested in your products, you're going to miss the bus somewhere and something bad's going to happen.
Good panel. This is very exciting and insightful information. We've touched on quite a lot of interesting dynamics, including the political, the economic, and social. So noted. Good doctor. We have another question for you. So we've had a good few presentations regarding the utilization of biometrics as an authentication mechanism. Very insightful and very exciting as well. What do you see that are the potential risks and benefits of using biometrics in summary? And what other advanced authentication methods in securing digital financial services in Africa can you postulate on?
All right, postulate on academic. All right. Doctor?
I'm Googling it.
You postulate on this. I think, look, when it comes to biometrics as a security mechanism, I'm for it, obviously, because it is a definite way of ensuring that one is authenticated. I mean, it's very difficult to intercept biometrics, right? I mean, you've got your unique fingerprint, you've got unique iris, and so forth. My only sort of reservation about biometrics, I think, from especially a use case perspective, is that it is a bit of an expensive form of sort of authentication mechanism to utilize, depending on where you want to adopt it. But I have seen, I'm just going to sort of segment the discussion to mobile applications, because I think it's a very perforated space. I think from a mobile perspective, I've seen how the authentication approach has worked, only though for those who have, and I'm going to touch on a bit of some telcos. In the telco space, you have what they call, you've got your high-end phones, and you've also got your feature phones. That's the word, feature phones, if I remember correctly. Those who are in the telcos, keep me honest, it was a while back on my side. But your feature phones, and you've got obviously smartphones. With your feature phones, which is what mainstream sort of, Africa may have, or maybe the poorer parts of South Africa have, you're not able to necessarily utilize those features to aid in the process of authentication using biometrics, right? Because they just don't have those features inherent in them. So you've got to think about how do you creatively ensure that people who possess those kinds of phones, who want to access, their financial services more from a mobile perspective, are able to do that securely, yeah? And what I've seen, I suppose one of the telcos do really well that I worked with to try and circumvent that is ensuring that they use, and it's a bit of an archaic way, but I think utilizing USSD as an approach, you know. I think USSD, very simple methodology, tried and tested, long in the game, but you really, for a use case of servicing that clientele, that market, to be able to have access to those financial services in a form of a secure way, you know, tends to be a working mechanism. I haven't done a lot of research and reading around sort of the penetration around those conventional methodologies, but I've seen how that has worked. I've seen how even the drive to move feature phones to have smarter features and make them a little bit more accessible and affordable to that population in order to be a little bit more intelligent in terms of the way we protect and in terms of the services we give those people has been enabled. Yeah. So, yeah, I think those are my postulations. I think in a nutshell, it's really about saying, you know, biometrics works, but the use case has to make sense for the population, the market, and the service you're trying to make available to the masses. If it's not, and I made an example of, you know, the feature phones, it's just not going to work. It's going to be too expensive. It's not going to be viable. Yeah. And I just want to also touch on the point of sort of ease of use. You know, you touched on that point, Anine, to say, you know, whatever technology methodology you utilize to secure or to provide a layer of security, it has to really be easy to use for the end user. You know, you've got to think about them, and I think it's important to have them in mind. And I think in your security strategy, in the security posture you want to deploy, it's important to sort of keep that in mind. And I know I'm kind of saying a lot, and you know, but it just depends the context. Yeah.
I think to add to that, what is interesting about that is the mention of USSD. I cringe if I think about the journey, right? Because for me, I've never been exposed to USSD or never been dependent on it. However, the informal sector, they know USSD by heart. They prefer it. They're creatures of habit, right? And like all of us, if you've had a phone with biometric identification and you now have to enter a PIN again, it's like, oh, okay, right? But USSD is such a well-adopted method that gives access to the masses for various financial services products. We cannot shy away from the fact that people still do that. In the retail sector, as an example, I was shocked to find that there are still millions and millions of consumers in South Africa that save for annual events like Christmas or back to school with saving stamps. Dude, saving stamps. And it's a physical thing. In Afrikaans, they say promesse. It's a physical proof of you've got an entitlement. The store of value is a physical, not a virtual thing, right? We feel it's so backward. We will not be able to move away from that and overnight digitize saving stamps, right? It's just a practical thing that people trust. They know it doesn't expire. It's a wonderful thing. And it's transferable. Right, so we need to take that into account in designing for the future. That people still to this day prefer things they can touch and see and know very well to work. Right, even if we in the ivory towers think that that typical product is not necessarily the best way forward. It's not futuristic enough or digital enough. There are some methods to the madness because the consumer will dictate the adoption, right, or the attrition.
Well, this is very insightful again, guys. I think we are taking quite a lot of nuggets away from these discussions and different dimensions. Take note, audience, that the focal of a lot of our commentary speaks to inclusivity, speaks to the socioeconomic awareness of your market as well. Relevance is important. Deploying a fancy system with a market which is irrelevant is actually a corporate strategy which is flawed in essence. And when it comes down to the statement of inclusivity, when it comes down to the statement of understanding your socioeconomic context, we are talking about the Africa problem statement in this forum. And I'd like to invite on the next question. And this is for you, Anna. How can partnerships between public and private sectors, in essence the PPPs, be leveraged to develop innovative solutions for securing the digital financial ecosystem? especially in the underserved regions. Of course, Anna, will hand it over to you to lead, but I'm sure we will dovetail with our commentary as well.
Yeah, please do. Thank you. So what an amazing question. It's such an amazing time to be alive, guys, and have the opportunity to partner, but you have to be open to it, right? So the first thing I'd want to mention is, once again, the same thing, designing from outward inward. In other words, taking the user journey. We cannot sit in here and think we know what the people on the street would need, right? You cannot design a product and solutions out there if you are not proficient with your potential market, right? And I think in getting the sectors, all the role players within open banking, wonderful example where the concept is phenomenal, right? But in helping and alleviating and achieving the Vision 2025 from the SARB, it falls flat from an exorbitant fees perspective, right? So guys, what now? You cannot expect somebody to pay a 14 Rand taxi fare and it costs the person 7 Rand to do so, right? I mean, really now. So typically, these things need to be designed end to end and in properly partnering, whether it's with the scheme, whether it's with the SARB, whether it's with PASA, or whether it's with the fintech designer or the cybersecurity experts. You have to properly partner, put your cards on the table and say what could potentially be a barrier of entry, what could create friction. Do we really need this? I know it's sexy, I know it's revolutionary, but do we really need this? In making the line as short as possible from the consumer to the end solution or the end outcome of what is sought within a product. And in doing that, you need to know your grid with regards to regulatory requirements in local communities, not local communities, but in demographics. In other words, because we in South Africa, we think, oh yeah, this and this. No, across border and those things, it's vastly different in other demographics, right? Either more open or more constrained. So for me, in partnering, you have to know what their X factor is, what your strong points are, and how you create that glue in between, right? To bring the best possible product or solution to the consumer.
Excellent. Excellent. Thank you for that. I think having the PPP lens and the coordination between all parties to achieve a common goal acknowledged. I'm going to take out the PPP lens and add in the financial literacy lens. This is an interesting topic because it's all about how do you reach out to your populist group. And I'll hand it over to Doctor. The same question, but with a financial literacy lens in the sense of how do we strategize in order to create that pool?
It's a very great question. And I think, I want to give a very practical answer. Let's use an example like e-wallet as a case in point. And I love e-wallet. I mean, unfortunately for my sins, I've changed nannies a couple of times, and it's been interesting because to see their knowledge of e-wallet, and I mention the reference of nannies because they are by and large not South African. My nannies have come from other Zimbabwe, have come from Lesotho, and neither have actually been banked. Banking for them was just simply expensive. It was not practical. So you're either going to pay them cash, hard cash at the end of the month, or you are going to utilize a tool. For me, in my case, I decided to use e-wallet. It's all I've known, and I found it to actually be quite practical. And I think from a financial literacy lens, really, service providers need to be very, again, and I'm going to hop on the point Anine utilized, ease of use. Everybody, in fact, let me ask a question quite emphatically. Who here was taught how to use e-wallet? And when I say taught, like you had to ask somebody versus you kind of just hearing about it and then just got on with it. Who was actually like physically taught? If you could just put up your hand. Okay, that's okay. I think some people might be scared to say, maybe you may have asked, but by and large, it was a very intuitive process. We heard about this way of accessing money. If you've forgotten your card, you need to pay your helper or your gardener, and you learned how to do it on your own. And many of us also learned on our own how to utilize the geo-payments feature. So I feel like you really, as a service provider, whether you're a financial services institution, whether you're in the form of banking, or you're a PayPal intermediary, whichever role you occupy in the ecosystem, your role is to make your services as user-friendly and as intuitive as possible. That's why, I think there's been such a hullabaloo around UAX, the user experience mattering so much. That's why in many organizations, specifically in banking, the concept of personas becomes important, to say what customer or user journey is this person going to follow in order for them to access your service, and you need to design your services, your applications to speak to that. Because quite frankly, if they don't, you're actually missing out. You're actually leaving money on the table. You're actually missing out on access to market and to those customers. So I think the financial literacy has to really be a self-taught process. It has to be an intuitive process. And you need to get as granular as a USSD, guys. One last thing I'll talk about before, and we do need to end the panel discussion, but one last thing, I worked for a company that was working in the WASP space. Don't know if you guys remember what WASPs are. I'm sure many of you don't, but WASP are those really irritating SMSs that we get for advertising and promotions and so forth. But it's a mega business. I mean, I'm talking 600 million rand business, right, in 2023. And with those, in that WASP space, I personally was intrigued that it's still making money, because many of us don't use it. We don't look at our SMSs anymore. I mean, who looks at the SMSs outside of OTP? I mean, I only really go to SMSs for OTPs. Outside of OTPs, I don't care about the adverts and. But that 600 million in that industry speaks to the feature phone markets who still look at those things, who still will find information, who still use please call me's, and will use a please call me in the advert thereafter to inform them of services and specials and so forth. So also I think as service providers, as leadership in influential roles, be cognizant of the fact that there is that end of the market that is still very active and alive, and is not necessarily part of the sophisticated upper echelons of the smart feature phone guys. It's important for you to really, really know your customer and know who it is you're catering to and for what. And on that note, we've really got to conclude. Over to you.
All right. Good audience, good panel. I do hope that this has been an insightful look into the context of securing the African digital economy. Remember, the takeaways: the cybersecurity value proposition, the inclusivity value proposition, and the trust value proposition on the basis of creating that cohesive digital economy. I think when it comes down to digital economy, it is a ever-pervasive element of every single topic here. We have to create a digital economy for us to exist within the digital economy. So on that note, I just want to thank you guys for your time on behalf of our panel. I hope it has been insightful again. All the best to you guys, and good luck with applying this knowledge you have gained within your professional roles and responsibilities. Thank you.
Cheers, thanks.